Hello and welcome to this introduction to IFRS video series where we will be discussing about the various international financial reporting standards. Today we will be discussing about IAS 16 property, plant and equipment. This is Ujjwal from EasyBooks Consult. EasyBooks provides easy and convenient accounting and reporting services. But let us focus on IAS 16 today. IAS 16 is applicable from 1st January 2005. The objectives of IAS 16 is to prescribe the accounting treatment for property, plant and equipment so that users of the financial statements can discern information about an entity's investment in property, plant and equipment and the changes in such investment. IAS 16 is applicable to all the property, plant and equipment except PP&E classified as held for sale, which shall be as per IFRS 5, biological assets related to agricultural activities as per IAS 41, mineral rights and reserves IFRS 6, exploration and evaluation assets IFRS 6. What are PPE? PPE are any tangible items that are held for use in the production or supply of goods or services, rental to others, administrative purposes, and are expected to be used for more than one period. Recognition. The cost of an item of PP shall be recognized as an asset if and only if it is probable that future economic benefits associated with the item will flow to the entity and the cost of the item can be measured reliably. PPE are to be recognized at cost initially. The cost of an item of PP&E comprises the purchase price plus import duties and non-refundable purchase taxes less stress discount and rebates. Add any cost directly attributable to bringing the assets to the location and condition necessary for it to be capable of operating in the manner intended by the management. Initial estimates of the cost of dismantling and removing the items and restoring sites. Here, the initial estimate of the cost of dismantling and removing the item and restoring the site on which it is located, the obligation for which an entity incurs either when the item is acquired or as a consequence of having used the item during a particular period for purposes other than to produce inventories during that period. Examples of directly attributable costs are borrowing costs, cost of site preparation, initial delivery and handling costs, installation and assembly costs, professional fees, cost of testing, etc. Examples of costs that are not cost of an item of property, plant, equipment are cost of opening a new facility, costs of introducing a new product or service, including costs of advertising and promotional activities, cost of conducting business in a new location or with a new class of customers, including costs of staff training and administration and other general overhead costs. Initial operating losses, cost of relocating or reorganizing part or all of an entity's operations. Now, regarding the spare parts and our servicing equipments, they are usually carried as inventory and recognized in profit and loss as consumed. Major spare parts and standby equipment qualify as PP&E only when it is expected to be used during more than one period. And similarly, if spare parts and servicing equipments can be used only in connection with an item of PP&E, they are accounted for as PP&E. In case of self-constructed assets are recognized on same principles as acquired assets, i.e. at cost which can be included borrowing cost which cannot be included internal profit and cost of abnormal amount of wasted materials, labors or other resources. Cost at initial recognition is the cash price equivalent at the recognition date. If payment is deferred beyond normal credit terms, the difference between the cash price equivalent and the total payment is recognized as interest over the period of credit. Fair value measurement at initial recognition. If one or more item of PP&E is acquired in exchange for a non-monetary asset or assets, or a combination of monetary, the item of PP is initially measured at fair value, unless the exchange transaction lacks commercial substance or the fair value of neither the asset received nor the asset given up is reliably measurable. Subsequent recognition. There are two models for subsequent recognition of PP&E. Under cost model, the PP&E is recognized at cost less accumulated depreciation less accumulated impairment losses, whereas on revaluation model, PP&E is recognized at fair value less subsequent accumulated depreciation less subsequent accumulated impairment losses. Revaluation model is permitted only if the fair value of the PP&E can be measured reliably and if an item of property, plant and equipment is revalued, the entire class of property, plant and equipment to which that asset belongs shall be revalued. The accounting treatment of the effect of revaluation on carrying amount. If the carrying amount is increased, the increase shall be recognized in other comprehensive income and accumulated in equity under revaluation reserve. The increase shall be recognized in profit and loss to the extent that it reserves a revaluation decrease of the same assets previously recognized in profit and loss. If the carrying amount is decreased, the decrease shall be recognized in profit and loss. The decrease shall be recognized in other comprehensive income to the extent of any credit balance in the revaluation reserve in respect of that asset. Depreciation. Depreciation is the systematic allocation of the depreciable asset amount of an asset over its useful life. Depreciable amount is the cost of an asset or other amount substituted for cost less its residual value. Residual value is the amount that would be obtained from disposal of asset after deducting the estimated cost of disposal if the asset is already of the age and in the condition expected at the end of its useful life. Useful life. Useful life is asset's expected utility. Estimation of useful life is a matter of judgment. Depreciation methods should reflect the pattern in which the asset's future economic benefits are expected to be consumed by the entity if the carrying amount is decreased. Change in depreciation method is accounted as change in accounting estimates as per IAS 8. Derecognition of PP&E. The carrying amount of an item of PP&E shall be derecognized on disposal when no future economic benefits are expected from its use or disposal. Any gain or loss arising from the derecognition, i.e. carrying amount less net proceeds from disposal, should be included in the profit or loss. Gains/proceeds are not classified as revenue. Disclosure requirements. The financial statements for each class of PP&E should disclose the measurement basis, the depreciation method, the useful life or the depreciation rate used, the gross carrying amount, and the accumulated depreciation, i.e., aggregated with accumulated impairment losses at the beginning and end of the period, a reconciliation of the carrying amount at the beginning and end of the period. The financial statements should also disclose the existence and amount of restrictions on title and property, plant and equipment placed as security for liabilities, the amount of expenditures recognized in the carrying amount of an item of property, plant and equipment during its construction, the amount of contractual commitments for the acquisition of property, plant and equipment, and if it is not disclosed separately in the statement of comprehensive income, the amount of compensation from third parties for items of property, plant and equipment that were impaired, lost or given up that is included in profit or loss. So this was the introduction to IFRS 16 property, plant and equipment. And if you wish to learn more about this topic along with examples and practical implications of the same, Please feel free to contact us at the address provided in the video description. Please feel free to subscribe to the channel and hit the notification bell so that you do not miss any new videos related to IFRS or other financial matters. Thank you for watching.